420, 2013, S&P 500, multi-year highs up here at 1596, where my pointer is. We had once again, just to give the new people a little update, is what has worked this year. We're in April, and it is April 20th, and we were extremely overbought. Let's just start there. Uh, when we had the jobs report, which was horrible last month, we will have another jobs report that will come out at the end of the month. But on 4/5, we had that big gap down in the S&P, and even at that level at 1560 up in here, we were considered what we consider overbought. And then, bam, we came down. That morning, I said they would try to rally up. All year, it's worked, but there have been some significant changes in this last week. So we rallied all the way up parabolically on a 60-minute chart. This is 60 minutes now. And you can see the 60-minute bars. And then we got up here. Then we had what we call a blow-off top right below that 1600 area. And we had the reversals come down. Let us not forget that on Monday, each one of these 1/4 deltas on the S&P in our market making platform is $4.12 per line in the S&P on a 60-minute. What we had during the week was when we were working this overbought process off, we had a lot of volatility in the futures market this last week, something that the market had not seen all year. No. Now that that price volatility is here, we said that volatility would increase, and it will continue to increase. And every rally, so we sold off, but we never made another high. We rallied up 1, 2, 3, 4, 5, almost 6 1/4 deltas. That was 24 handles in the S&P. One of the things I want to say is that what had worked, like over here on the bad jobs report, just horrible for the U.S., making highs. Every one of the pullbacks in the S&P had made higher highs. Not this time. In fact, we came down to a very critical level. 1540 on the S&P is a very critical level. On a closing level, we hit 1536 on the low on 418 right here. And then we rallied up. So we're back above this 1540 mark on the S&P. So what we're going to be looking at is where the resistances would be on Monday would be 1563 on the S&P. That's this big down bar, this 60-minute down bar. That's half of that bar. In the shorter term, this half bar here is 1554. We are already right here, so we're starting to clear this last 60-minute bar. Now, volatility on the S&P is where does that bull that's been on the sideline and just where does that bull come back into play? But most importantly, I want the public to know this is one of the most hated rallies on Wall Street in U.S. history. So there's a lot of money on the sideline. We're going into a seasonality change. What happened in the first quarter of 2013, we're going to see how this volatility plays, because you see the S&P, in my view, is not on sell. But we're going to watch and see what the public does. Fund managers, foreign people that want to buy our markets. But this is the major reversal, and it hasn't had it all year. So you went from 15, here's the top. The top was 1597.35. This, and that was on 411 in April 411. The low that was put in was 1536. Do the math. That's how much of a retracement we've had in the S&P 500 from an extreme overbought level. Then on Friday, Thursday, we had earnings out of Google and whatnot. We had all the stuff with Boston and the terror that was going on in that state. Bostonians were locked down. It was a real tragedy of what happened there. But some of that volatility is in here based on that event. And then some of the earnings reports that came out, like IBM, were horrible. They're all on the website, MMT. So basically, as we climb up, we're going to take a look where all the other bad news, the bulls come in all year and made nothing but higher highs. Now that we have this reversal that SMF, stock market funding, was telling everyone around the world that was going to happen, and that the volatility in the indexes and the individual equities have increased substantially, and volatility to the upside and volatility to the downside. So our resistance levels will remain right here on this 60-minute chart. What we will be looking for is where it fails and starts another leg down. Now, mathematically, one thing about mathematically, you can go right back up to the neckline. We'll find out. But on the way up, for the first time in this year, we're going to see how these resistance levels act and play out. So what I would like to show the MMTs on this S&P, it's nice to be able to buy calls on the S&P when they're in bull mode. You can buy index calls on the S&P 500. One of the things that we're going to feature is where the 1588 breakdown was. This is going to be the key right here. Then that's the counter rally. But the counter rally did not do what it's done all calendar year, and that's come up and test the highs or make another new high. Did not happen. In fact, we made the lower lows, which is healthy for a market like this. So basically, on this 60-minute level, moving forward for the rest of the calendar month, with a string of S&P 500 earnings hitting the street next week and the week after, we'll have at least 65% of those companies reporting in the S&P 500 index. So IBM didn't do well. That was a major blow to the Dow and a major blow to the markets. We have a very low growth environment. Let it be known. It's a stock pickers market. Let it be known. Buy the quality on the dips. Let them set up. That's what we're going to do here on the S&Ps. When it fades back, we're going to see if it will test. So when you come down to these support levels, one of them that we're really going to monitor is this lower one right here. This is 1543. This is called an S&P 60-minute. It's a half bar, and it's 1543. That would be that support level. Okay, that's when they bring it on down. The next support level, there's another one up above that. This particular half bar right here on 419, that is exactly 1547.27. So it's going to be these two particular bars. So let's just blow up this bottom, and let's take where the last sell-off high was, which was right here on the S&P, and that was on 416. The half bar here is 1574. So that way up here will be where we're going to really find out what this S&P is made of in the short term. So once again, this bar and this bar is the lower support level. This bar right here is going to be the major resistance level at 1563.74. That's the conclusion of the S&P 500. Now MMTs, when we consolidate and put bottoms in, we're going to see if that money wants to be a hero and come back in this market. There's a lot of underperforming asset managers. What do I mean by that word? A lot of fund managers. A lot of people are going to play catch up with these markets, so that buy the dip mentality is still going to be there. And yes, we have a very low growth environment in the US. It's a stock pickers market. It's a major update on the S&P 500 as the lower support levels right here and the resistance levels going back up are going to be a major role. And once again, what we have had happening back over here when we were putting in these little corrections early in the year, notice that all the diamonds, look at all the lines are going up. That's called ascending. Okay, this is a mathematical platform. It's not your regular chart type platform, but it's 100% accurate as to what it does. And when they got these dips down here and they made the same lows right here, we rallied up. It didn't work here. It sold right back down, and it sold down, and now we're going to come back up. And one thing about reversals is one of the things that we will be looking at is when we do hit these wall of resistance areas, is does the S&P have a big reversal at that time? We'll find out, because we would be looking at buying put options if this is the case. So once again, if we have another major reversal at much lower highs than the original high, say that we come up here and fill in at 1572, we get above these half bars, this is going to be the crown part right here. And if we start getting another reversal with another 60-minute sell bar right away, we'll buy put options on the index on an intraday level. They will pay. And people that have been shorting the S&P, they've been killed all year. So now the trend in itself, the price movement in the S&P, we're looking for lower high reversals.